Welcome to the Heart of Economy channel. Today, we are not going to watch an ordinary Bitcoin video. Today, we will explain step by step, with data-driven, deep macro analysis and the perspective of a financial expert, why Bitcoin could potentially reach $1.5 million. We will discuss why Ark Invest CEO Cathie Wood made the bold prediction, what logic she bases it on, and whether it is truly achievable, all through a calm financial analysis. By the end of this video, when Bitcoin is discussed on Twitter, X, Reddit, or during your work break, you will have the knowledge to distinguish between dreams and reality, backed by numbers, on-chain data, and a macroeconomic perspective. This is not a hype video. It's a deep journey designed to help you build financial awareness. Let's begin. It was 2015. Bitcoin was trading around $250. Most of Wall Street saw Bitcoin as a toy. At that time, Ark Invest argued that Bitcoin could be a new monetary system. These claims were taken so lightly that some even said Cathie Wood was using it as a marketing gimmick for attention. However, Wood, together with her team, analyzed Bitcoin not as a classic technology investment, but as a structured, censorship-resistant global store of value. They presented their research to the famous economist Art Laffer. After reading the report, Laffer made this historic statement: "This is what I've been waiting for since the gold window closed in 1971. Against the US's $4.5 trillion monetary base, Bitcoin's market cap was only $6 billion at that time." Laffer stated that Bitcoin could establish a disciplined monetary standard. From that day forward, Cathie Wood's belief in Bitcoin was shaped not by speculation, but by economic theory and a monetary history perspective. Today, Bitcoin is trading around $111,000, and with its market cap approaching $2 trillion, it has become an asset that must now be taken seriously in the global financial system. So, why does Cathie Wood set a $1.5 million target? Because the model developed by Ark Invest rests on three main pillars. 1. Institutional investors and ETF inflows. 2. Younger generations shifting toward digital gold. 3. Bitcoin usage in emerging markets to escape monetary crisis. The approval of spot Bitcoin ETFs in January 2024 formalized institutional interest. BlackRock, Fidelity, Ark, and other major funds have added Bitcoin to their portfolios, directing billions of dollars in ETF flows toward Bitcoin. Why is this flow important? When institutions start viewing Bitcoin not just as an investment, but as a hedge against inflation and geopolitical risks, they begin holding 1 to 5% of it in their portfolios. This alone translates into trillions of dollars in new demand. Gold has historically been seen as a safe haven. However, Gen Z and younger investors are turning to digital gold, not physical. They prefer assets that are divisible, easily transferable, and borderless. Bitcoin, with its 24/7 tradability, limited supply, and decentralized nature, serves the same function for younger generations. According to Ark Invest research, as wealth transfer from older to younger generations, Bitcoin demand will rise exponentially. This creates an organic demand channel that drives prices up over the long term. In countries like Argentina, Venezuela, Nigeria, and Turkey, currency instability is pushing people toward dollarization and stablecoin usage. However, due to government foreign exchange controls, taxation, and monitoring mechanisms, people are shifting toward censorship-resistant systems like Bitcoin. According to World Bank and IMF reports, nearly 70% of the population in emerging markets lacks access to financial services. This positions Bitcoin as a banking system for the unbanked. Cathie Wood notes that this demand creates a constant baseline for Bitcoin in emerging markets. When combined with supply constraints, it drives prices up in the long term. Inflationary pressures in the US are slowing, and the Fed is expected to begin a rate-cutting cycle. The global decline in the dollar's value is increasing demand for alternative assets like gold and Bitcoin. Gold is currently testing historical highs. However, gold's annual return is well below Bitcoin's average annual return. This macro environment increases demand for Bitcoin as a hedge against inflation and systematic risks. According to Ark Invest model, even if just 2% of global financial assets shift into Bitcoin, it has the potential to drive Bitcoin above $1 million. Bitcoin's supply is capped at 21 million units. Around 19.7 million are in circulation, with the remaining supply gradually being mined. Following the 2024 halving, mining rewards were cut in half, reducing block-level supply. The proportion of long-term holders has exceeded 70%. This limited new supply combined with rising institutional and retail demand operates as a fundamental mechanism pushing prices higher. This mechanism triggered the 2020 to 2021 rally, and the same cycle has reactivated in the post-2024 period. Although Cathie Wood's target is attractive, there are risks to be mindful of. Volatility risk. Bitcoin can experience corrections of 15 to 30%. Regularity risk. Stablecoin and crypto regulations may tighten in the US and Europe. Geopolitical risks. Sudden global shocks may create selling pressure. Additionally, for Bitcoin to reach $1.5 million, it will need to maintain technological stability, address energy criticism, and remain compliant with regulations. If you are thinking long-term, Bitcoin is no longer just a speculative asset. It is a new asset class that has carved out a place for itself in the global system. Holding 1 to 5% Bitcoin in portfolios can optimize the risk-reward balance over the long term. However, it is necessary to be prepared for short-term price movements, size positions correctly, and follow market news flow. To align with Cathie Wood's vision, it is important to understand her portfolio management discipline, a research-based approach, a long-term perspective, and turning volatility into opportunity. Today, we explored Bitcoin's $1.5 million target. We discussed how realistic this target is in light of Ark Invest's macro analysis, on-chain data, and economic theory. Yes, this target is possible, but there are risks and obstacles. The most important thing is to act with knowledge and avoid taking unplanned risks. Do you think Bitcoin can truly reach $1.5 million by 2030? How will the world change if this target were achieved? We look forward to your thoughts in the comments. If you would like to see more deep financial analysis videos like this, don't forget to like the video, subscribe, and turn on the notification bell. See you in the next video on Heart of Economy.